If you like what you see, if I can please request you to subscribe to my channel. So what is a stock market? Before we begin, did you know that Microsoft is worth more than the entire stock exchange of Brazil? Or that iPhone maker Apple is worth more than the entire GDP of Canada? The most expensive share in the world is Berkshire Hathaway at more than $500,000 a share? The concept of a stock market is ancient and has existed for nearly 400 years. The Dutch East India Company was the first company to offer equity shares of its business to the public, effectively conducting the world's first initial public offering. The Amsterdam Stock Exchange is considered the oldest stock exchange in the world. So what is a stock market? A stock market is a place where you buy and sell shares of a company. If you own shares, you own a small part of a company. Look around you. You probably watched Disney cartoons, or visited your local bank, or went on your last vacation via a Boeing airplane. Well, several of those companies are public and listed on stock exchanges around the world. Investors buy these stocks and create a diversified portfolio of shares. Why do stock markets move up and down? Besides supply and demand, the first reason is economic and political shocks. Wars, invasions, pandemics, high interest rates all affect the stock market. Besides major shocks that affect the markets, particular industries are affected by their specific situation. Example, the EV or the electric vehicle industry could be affected by increase in material costs. Individual companies are also affected by specific news, perhaps a merger or an acquisition. So how would you value shares? Companies make profits. When you consider the profit on a per share basis, you divide the profits by the total outstanding shares of the company to obtain the earnings per share. Investors go on and put a multiple on this. This multiple could be high or low, depending on investors who see growth or see the company as an established one. You think yourself, would you value your medicines the same way you value a television? In the same note, investors place multiples based on the company and which industry it operates in. So why invest early? Shares are a great way to beat inflation. Investing early has life-changing compounding effects. Shares are relatively liquid and can be converted to cash within 2 days. They provide a great opportunity to diversify our wealth besides other avenues like gold and real estate. They provide flexibility and ability to build security and allow us to do what we like and live life on our terms. So why don't you tell me what's the difference between a growth stock and a value stock? Quick hint, think about the industry and the multiple at which the share trades.